don't jump to the wrong conclusion that this is the end for gold, or gold's not going to be a safe haven, or gold's not going to go up. Gold is going up. The war is very bullish for gold because the war is going to be very inflationary, and ultimately it's going to lead to a much lower dollar, and that is going to be bullish for gold. But for now, you've just got another opportunity to keep buying gold, to keep buying silver. Silver's about $85.50. Again, we're nowhere near 50. We broke out. We're just consolidating, and silver has been as high as 120 or something like that, just like oil, almost the same price that oil got to. And both oil and silver are going to make new highs. On Sunday night, oil prices shot up. Maybe it was one of the biggest one-day increases in the history of oil. Oil got up to above $119 a barrel.
Recent geopolitical tensions have led some investors to prematurely question the safe haven status of precious metals. However, making such assumptions would be a critical mistake. The reality is that ongoing global conflicts are inherently inflationary, fundamentally guaranteeing a significantly lower US dollar and creating an incredibly bullish environment for gold. Currently, silver is healthily consolidating around the $85.50 mark, successfully holding far above previous resistance levels. Providing these critical market insights is Peter Schiff, a renowned economist and financial commentator known for his advocacy of hard assets. He emphasizes that the current price action is simply a prime opportunity to continue accumulating physical bullion before the next major breakout. The broader commodities market is signaling the exact same inflationary warning. Similar to silver's previous dramatic push toward the $120 mark, oil recently experienced one of its largest single-day surges in history, catapulting past $119 per barrel. Ultimately, as the fiat dollar continues its inevitable decline, both oil and silver are perfectly positioned to shatter their previous ceilings and establish unprecedented new market highs. Now, we present the clips from his interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The biggest losers in the stock market so far from this Iran war have been the gold stocks, gold and silver mining stocks. Even though gold and silver prices haven't really come down, all that happened is they didn't go up. Gold and silver prices are about where they were, but the mining stocks have got hit pretty hard, way harder than the Dow or the NASDAQ, or, any of those. Now, of course, gold and silver stocks went up a lot more. In fact, the market was, flat. The gold stocks were way up in 2026 after having killed it in 2025. So they're losing some of those gains as people are taking profits or selling stuff, and they're getting nervous about the war, about recession. Maybe the Fed is not going to cut rates because of the high oil prices or whatever. But this has created another great buying opportunity in the mining stock because they were a great buy before this decline, and now they're an even better buy, because their profits are not declining. Now, yes, oil prices have gone up, and that is going to be a factor in the profits of gold and silver mining companies. But even with the higher oil costs, it's still not going to offset the profits from higher gold and silver prices. And those higher profits were still not reflected in the stock prices. So you could say that some of the benefit has been reduced by the decline by the increase in oil prices. But again, if the market thinks this is just temporary, which it obviously does, because if they thought it was permanent, there would be a much bigger drop in the S&P and the NASDAQ, and there would be a much bigger rise in oil stocks. I mean, oil companies have gone up. My oil stocks are doing well. They're making new multi-year highs. And I talked about how I added to our oil positions, and I added to my own oil positions a few months ago, anticipating higher oil prices, not necessarily because of a war, although I knew that was possible, but I thought oil prices were going to go up, and I was right about that. But the market just assumes that oil price spike is a short-term phenomenon. So it's not going to impact earnings according to the way the market views it. So they should be looking at these gold and silver mining stocks as incredible buys, which they are. And I think they're going to rally big any day. It's hard to say when they're going to flush out the weak sellers, but that's going to happen. And gold and silver are going to rise, and these stocks are going to make new highs. And I think you want to take advantage. So not only do you want to go to Schiff Gold and buy physical gold and silver now, but you want to buy the mining stocks, whether you pick your own mining stocks or open up an account at Euro Pacific Asset Management for us to manage for you, or you buy my gold fund, right? Buy my fund at Euro Pacific Asset Management. My fund is EPGIX. That's the no-load advisors class that you could buy at any discount broker. Or if you want to do it yourself, you could, subscribe to our newsletter, Strategic Assets. We've got interesting companies that we profile in this space that you could just go out and buy. These are a lot of smaller stocks that are even too small in many cases for us to buy in the funds. This is an opportunity in these stocks. I think the overall stock market hasn't gone down enough, but gold hasn't gone up enough. It hasn't even gone up at all. And these gold and silver mining stocks should not have gone down, yet they did. And that just represents another great opportunity to buy them. We've seen some strength in the dollar. Not a lot of strength, but we had seen some strength in the dollar. And I think that's one of the reasons that we haven't seen a big run-up in gold. I mean, gold prices are still around 5,150. So gold hasn't really rallied during this. Now, of course, gold had a huge rally before the Iran war broke out. So it's just kind of consolidating. Don't jump to the wrong conclusion that this is the end for gold, or gold's not going to be a safe haven, or gold's not going to go up. Gold is going up. The war is very bullish for gold because the war is going to be very inflationary, and ultimately it's going to lead to a much lower dollar, and that is going to be bullish for gold. But for now, you've just got another opportunity to keep buying gold, to keep buying silver. Silver's about $85.50. Again, we're nowhere near 50. We broke out. We're just consolidating, and silver has been as high as 120 or something like that, just like oil, almost the same price that oil got to. And both oil and silver are going to make new highs. They're going to make considerable new highs. So you have an opportunity to buy them now. Don't forget about buying some gold and silver at Schiff Gold. Let me take a look and see if we've had any kind of reversal, because the market was down. Yeah, gold's down about $23, 51.51. Silver is down about 37 cents, 85 and a quarter. Oil prices, what are they doing? They're about the same, about $93 a barrel for oil. But get your gold and silver while you can. Another big leg up is coming, and an even bigger opportunity exists in these mining stocks. EPGIX is my fund, and I think we've got a great portfolio of stocks, particularly the juniors, that I think are really going to explode to the upside in the next leg of this bull market. You can get all the information on my funds, all 5 of my funds. You can read the prospectuses.
The recent geopolitical tensions have triggered a significant sell-off in gold and silver mining equities, pushing them down much harder than the broader stock market. However, this temporary pullback represents an incredible buying opportunity for precious metals investors. While physical gold and silver prices have remained relatively stable and are simply consolidating after massive previous rallies, the mining stocks have been unjustly punished by fleeting recession fears. Furthermore, while rising oil prices do slightly increase operational expenses for these companies, these fuel costs will not offset the massive profit margins generated by historically elevated metal prices. The broader market is incorrectly pricing in this inflation as a short-term phenomenon. As fiat currencies continue to weaken, these fundamentally undervalued gold and silver mining stocks are perfectly positioned to explode to the upside during the next major leg of this precious metals bull market. Let's get back to the interview.
When Donald Trump talks about the war, see, here's the problem. I wish I could give Trump the benefit of the doubt, but I can't, because Donald Trump lies so often about so much, including the whoppers he told today in Kentucky. How am I supposed to believe anything that he says about this war? I can't, Not that I want to believe what the Iranians say. I don't trust them either. But I don't trust Trump at all. And nobody else should. And it's not like the U.S. government has an excellent track record of being honest with Americans about Middle East wars, because they all lie. So Trump is obviously not the exception. He is the rule. He didn't drain the military swamp. He is making sure it is deeper and murkier than ever. But I want to start again talking about the oil market. So on Sunday night, oil prices shot up. Maybe it was one of the biggest one-day increases in the history of oil. Oil got up to above $119 a barrel. Huge, right? It started the year at about 55. So it had more than doubled on the year. Most of the gains, obviously, over the prior week, since we declared an unconstitutional war against Iran. But it was a huge move because oil ended the week, I think, just about 90. And so it shot up from 90, 33%, like $30 a barrel. Now, the market started to reverse because news broke that countries all around the world were going to do a coordinated release of oil from their respective strategic petroleum reserve. And that hit the market. And so we got a lot of selling when that news came out. Now, obviously, the nations are trying to do what they can to try to bring oil prices down. But this is just a patch because to the extent that they do this and they sell out their oil now, well, now what are they going to do? Right? What do you do when it's gone? Remember, the U.S. already has record low stocks in our strategic reserve because we sold half while Biden was president. And the only emergency was the midterm elections were coming up. And so Biden wanted gas prices to be lower. And so we blew through half of our strategic reserves that we were supposed to have for an emergency. Now, you could say that this constitutes an emergency. Of course, we created the emergency, right? This is not something that just happened to us like, just completely out of, left field here. This was a known consequence of an action that we took. We decided, or Trump decided, that he was going to go to war with Iran. He didn't have to do that. There was clearly no immediate threat to the United States from Iran. I mean, nothing had really changed. Again, in fact, if anything, the threat had been diminished because 6 or 7 months earlier, we completely obliterated their capacity for nuclear weapons. At least that's what Trump told us back then. So we were supposedly in a great position. So there was really no need for this war. But for whatever reason, Trump decided to launch it. Well, clearly, the fact that oil prices were going to go way up, well, that's just obviously that's going to happen. And, Trump has said, and all the Republicans got the memo because if you listen to all the media outlets, they're all basically reading from the same script. Just like the Democrats did, when they wanted to talk about Biden being sharp as a tack, right? And everybody said the same thing. Well, the Republicans are all saying the same thing now. They're all reading from the same script about how high oil prices are just a acceptable price to pay for the long-term benefit of getting rid of Iran, right? Or of extinguishing this threat that is overhang the U.S. for, 40 or 50 years, right? So it's a small price to pay. So Trump is asking Americans to pay this price because of the long-term gain. So let's have some short-term pain and we'll get some long-term gain. What bothers me about that is that this is really unnecessary short-term pain. But if the president really believes that it's worth, taking some short-term pain to get long-term gain, why not apply that to where it really matters, like cutting the deficit, cutting government spending, entitlements? How about some short-term pain there? How about the president telling people you're going to get a smaller check from the government? That's the short-term pain we need. We're going to have to cut some government spending, which may be painful to the people who are receiving that money, but in the long run, it's going to be great. Or how about allowing a recession that is necessary to purge the economy from these economic imbalances that are weighing it down? Why not have some short-term constructive pain so that we can have long-term gain? There are so many, ways that Americans could be asked to take some pain for some real gain. This one makes no sense because there is no real gain that we're going to have from this war. I doubt that anything substantive is going to be achieved. But I wish that Trump had the same attitude to solve real problems that he can solve, instead of making up problems and then trying to solve those. We have enough real problems without having to make them up. And of course, the cost of the war is another one. And, when people are talking about whether the rising oil price, and by the way, oil's up at about another $5 this evening. So we're back in the 90s. We're almost $93 a barrel on oil. And yeah, we're going to take out that 119 high. I don't know when. but I think we're going to take it out. But oil was going to go up anyway. It's not going up just because of the war. It was going to go up even without the war. The war, though, is now a convenient scapegoat for oil price. But oil prices are certainly going to be a lot higher than they otherwise would have been.
In conclusion, the economic consequences of recent geopolitical conflicts are far more severe than mainstream narratives suggest. While politicians attempt to frame soaring energy costs as an acceptable short-term sacrifice for long-term security, the reality of the oil market paints a much bleaker picture. The sudden spike in oil prices, which recently surged past $119 a barrel, exposes the extreme fragility of the current energy supply chain. Furthermore, the coordinated global effort to temporarily lower prices by releasing oil from the Strategic Petroleum Reserve is merely a short-sighted patch. The United States has already depleted its emergency reserves to historically low levels, leaving the nation dangerously exposed to future supply shocks. Rather than engaging in unnecessary conflicts that artificially inflate energy costs and burden everyday consumers, leadership should focus on addressing actual domestic financial crises. Genuine long-term gain requires making difficult decisions at home, such as drastically cutting government spending, reducing entitlements, and tackling the massive national deficit. But must follow this fundamental truth. Attempting to mask a self-inflicted energy crisis with depleted reserves will inevitably lead to a devastating inflationary outcome. Share your thoughts in comment section below. If you found this market analysis valuable, please support the channel by liking this video and subscribing for more exclusive precious metals content. Thanks for watching.